What's up everyone, welcome to another video. I'm making a quick video during intraday because it looks like market's going bullish. You can see SPY right here having an amazing day on the 1 minute candles here. So far it's a big rallying day. If we get any bad news it could flip. You know the market does whatever it wants, but so far we're looking good. And when we check out the other macro tickers, let me pull those up. Start off with the VIX here. If you know about the VIX, when VIX goes down, SPY goes up. And you can see VIX breaking down here. It's breaking down out of this smooth price channel on the VIX index, and breakdowns coinciding with these high prices with SPY flipped around in the past. I mean, this is a good time to go long, theoretically. But we are in a bear market, so long positions are very scary. Should be looking for short positions, but on the short term, it looks like we are going to be having some green days, just like we've had the past few days. And then when we flip it over to the US dollar index, this thing is dropping too. And when this thing drops, equities typically come up. There's an inverse correlation with the US dollar index and the equity markets. But I do want to point out that the price is near a... Wow, that was sloppy. Price is in this support zone that I've highlighted right here. This is where the dollar has bounced several times in the past. This is what it's been holding it up in its rally since last November, basically. There it is. When I zoom out, you can see it a little better. And another thing that's interesting here, we got a wedge pattern here, and the price broke to the downside. And sometimes you get momentum to the downside when you see a wedge pattern. If UUP breaks below that support level I mentioned earlier, then we'll definitely get some serious bullishness in the markets. But for that to happen, we're going to have to break below these support levels. These will be strong on the way down, definitely. These levels here I'm mapping out. You can map them out on your chart. Basically this low here, this high here, and this low here. It looks like we have a little, might be a level here with all these dojis. Maybe a little one here as well, but the main ones are the highs and the lows. So watch out for those support levels if and only if the UUP wants to break below that support zone that I mentioned earlier right here. The next thing we're going to look at is corporate credit, and this thing looks like it's actually testing resistance. It might want to break out here. It did break out of the more important resistance, the one on the lower side here that I'm highlighting. I put like a ghost resistance level here. It's not a really strong one. This was a false breakout, so this resistance level may be invalid. But aside from that, if we get above that little ghost resistance level, then, man, it'll be bullish for equities, definitely. Might find some resistance on LQD around these levels, it looks like, possibly. But most importantly, we got to get above that ghost resistance. This thing's looking bullish, just like equity markets. And remember, corporate credit, LQD, that's the liquid companies, the ones that survive recession or that are more likely to survive a recession, big companies. And if investors invest in LQD, I don't know why I put LQS there, then obviously they assume that the economic environment's going to improve. That's why they invest in the credit of these companies, because they want to get their money back, right? All right, here's more corporate credit. This is the ticker HYG. And this thing's been on an uptick for the past couple weeks. It looks like we do need to get above this resistance level to go completely bullish. Corporate credit is the only one of the macro tickers that I'm going to be mentioning that is not in the bullish zone quite yet. And that's from a price action, a technical price action standpoint. Some of the indicators like RSI and MACD will be looking kind of good. But I only use these sub-indicators as a reference because they are dependent on whatever the price action does. So technical price action, that's more important than these little guys down here. All right, here we are with 10-year yields. You can see the resistance line here. It looks like the yields are rolling over quite a bit. They might roll over until Jerome Powell hikes rates again on the next meeting. Might get a bounce at this support level I drew here. That's a theoretical support level. The one I'm highlighting here, I basically made a parallel line with the resistance there and transposed it down here, and that's the theoretic channel. If we get a bounce there, then that might coincide with the rate hike meeting. In my opinion, that might happen because these technical levels always coincide with these major events. But I could be wrong. We'll see. But most important fact here, yields are coming down. That's bullish for equities in the current market environment right now. Now that's basically it for the technical update on the market. Everything looks like it's going bullish. All the ticker symbols that follow the macroeconomic environment are about to all completely go bullish. All we need to wait on is corporate credit. They need to pass above resistance. And I mean, wow, look at SPY. It looks like everything wants to go bullish here, man. If you have a long position today, then you're definitely killing it. But anyways, guys, like, comment, subscribe, notification bell, all that good stuff. I'll see y'all on the next video.